Hi guys, welcome to the video. It's been a well and truly waited for video. It's been 3 months since I last did a stock update. Check the video out before if you want to know why. Basically, I've moved house and I've had connection problems with the internet and all that sort of stuff. It's all on the old video for you. So we've got a lot to go through today. We're going to go through the dividend portfolio and we're going to go through the growth portfolio in the ISA. We're going to take a quick look at those really quick, an update, see where we are. And then we're going to have a look after that at where we are overall with the return on income. We'll go into what dividends I've got and all that. So let's jump straight in onto the phone and have a look at the dividend portfolio first. Okay, so we jump into the invest portfolio first. For the last 3 months, you can see I'm up 9.6%, and my account has gone from £3,000 since you last saw me, right the way up to 4,000 to the current day. So let's jump in and we'll take a look at the stocks each individually. We'll see where the portfolio is at. Okay, so we go to 3M first. The last 3 months, it's really good, 11.6% up. I have added one position into this in the last 3 months since I saw you. Yeah, it's one of those really good stocks. It's gone up loads. I'm happy to keep this. It keeps going up. It has a really good dividend as well. If we go and look, we are being killed a bit on the FX impact. But it is giving a current yield of 3.2%. And it's one of those stocks that, yeah, I'm happy to have in the portfolio. AbbVie is another one I'm happy to have in. If you look at that stock chart, it's really good. The last 3 months, it's actually only up 2.53%. But it's one of those stocks that I'm really happy to have again. It's rebounded. I'm doing really well on it. And with a percentage of 4.95%, nobody can argue with that dividend yield and that growth on AbbVie. Okay, next we come to Apple. It's been a bit of a rocky 3 months, 8% down. Nothing can be helped, unfortunately. It's one of those growth stocks that's been hit, and the FX effect is really nudging against that as well. With a very low dividend yield still of 0.68%. It's one of those that is continuing to grow. It's just unfortunate that it has stagnated for a bit lately. Okay, AT&T, again, it's slightly down. The last 3 months, it's up nearly 6% though, so it is doing quite all right at the minute. And you can see I am actually up, it's just the FX impact is quite high on this one, nudging me in the negative. But it has got a dividend yield of nearly 7%, as we saw just there. So yeah, it's one of those, it's quite low still at the minute. It's gaining ground, and I'm happy to hold it just for that share. Also increased to 14 shares now on that one. Okay, next Coca-Cola. I've added 2 more shares in. The last 3 months, you can see it's just down. It has recovered from a big dip. Again, it's one of those companies that dipped quite heavily. But I am all right in the positive. It's just going to continue to grow as normal. I'm not sure whether to trade this one out for PepsiCo. You can see the FX impact is killing me, but I am 7% up nearly on the actual stock. But with a dividend yield of 3.2%, I am considering, should I sell this one out for PepsiCo? Should I add it as well as? I'm not quite sure. What do you guys think? Let me know in the comments. PepsiCo or Cola or both. Let me know which you think I should do. Okay, we move on to GlaxoSmithKline. Boy, where do I start with GlaxoSmithKline? Last 3 months it's down. But if you can see this sharp decline lately, it has gone to all-time lows at one point, and I have actually bought in at 11 shares since I last saw you 3 months ago. 11 shares being because it just kept on dipping so much, I had to keep averaging down. It was getting such a good price. I had bought in quite high, so I have really averaged this one down, which has helped me greatly. So I am down 4.65%, but it is giving a very healthy dividend yield of 6.16%. So it is a really good dividend, and that's why I've been buying it. It is a really good company. I did buy this quite high, like I said, so the fact I've been able to get it down as low as I have has been really good. So I really have took advantage of that dip on this stock. Johnson & Johnson next up. The last 3 months it's been up 8%, which is really nice growth the last 3 months. It's up 30% this year on year, and you can see by the chart it's got nice growth to it. I have not added any more to this month, but I am 5.8% up. Legal in general is one of these companies I'm not quite sure what to do with now. I bought it at pretty much low price. You can see by the chart, and I don't know what to do now. I should really be averaging this up. It is becoming one of my smallest positions now because I didn't average it up. It's up so much, but I'm up 50% on it. And with a dividend yield of 6.45%, that is absolutely crazy. And that is at the minute as well. You've got to think and understand that when I bought this at £1.89, I've got this for a dividend yield of about 11 or 12%, which is absolutely crazy. That's my actual true dividend buying price. Okay, we're going to LTC now, and as you can see, the last 3 months, it's up 9%. I really don't know why people don't talk about this more on YouTube. It's up 40% for the year, and you can see from the big dip, it's recovered quite nicely. It was really low at one point, and I bought in back on the initial uprise of it. But you can take a look. I'm actually up 14.6% before FX, and this has a nice dividend yield as well of 5.26%. So it's a great dividend yield. It's a monthly paying stock, and I honestly I don't understand why more people don't buy into this. Next, we've got Microsoft, and the last 3 months up 6%. It's just one of those steady growers, isn't it? It's in every portfolio, I think. And that is that not a perfect chart if you've ever seen one? It definitely is. Not much of a dividend with it, but it's one of those that it's a growing dividend, and it's one that I'm going to hold for a long time. I've only got one share in it. I'm unsure whether to sell Microsoft and Apple and put it in the growth portfolio or not. Might be better to do that. Old Republic International. Now, like LTC, I don't know why more people don't talk about this on YouTube. I mean, look at that chart for the last year, and look where I bought in. It's an amazing chart, really. It is a US stock, and it's just about fully recovered now from the dip. So a lot of people might have missed the boat on this one. I do hark on about this quite a lot, and like I say, I've never heard one other YouTuber mention this stock. Maybe they just don't know about it or haven't seen it. But I'm actually up 35% on this stock before FX, which is absolutely crazy. And it has a really nice dividend yield as well of 4% nearly. Now that 4% dividend, it's not just the dividend. Every 4 of the last 5 years, this company has given a special dividend out of $1 per share. So for the last 4 out of 5 years, that dividend yield has been more like 10%. So it's great. You get a special dividend every year, and also you get a 4% dividend for the year as well, and you get some really nice growth. I really don't understand why more people aren't talking about Old Republic International. It's a mystery to me, but it's definitely one for my portfolio. Raytheon Technologies, we take a look at that one now. So the last 3 months is up 11.25%, which is really good growth. As you can see by the chart, though, it's got a lot way to go yet to recover from the crash. I mean, look how low that still is. I mean, that is just unbelievable, right? So I'm loading up on this as much as I can. I just think it's an awesome stock. It's a great dividend. We'll take a look. I'm 25% up, 20 after FX, and with a dividend of 3.14%, and it's growing every year, and the stock's got a lot of growth in it yet to come, back to recover. Again, it's just a really good stock to have. Realty income, I've added 2 more in since I last saw you, and the 3-month chart, there you go, is 5%. It's a monthly paying one. It's in most people's stocks. It's got a bit way to recover. It is a bit rocky, but I am up on it at the minute, which is great to see, and it's monthly paying. And with a dividend of 4.5%, you can't really grumble, although it has been a slow growth on the dividend front. Royal Dutch Shell, let's take a look at this. It's one of those that's got a lot of way to go yet to recover. Last 3 months it's up 7% though. A lot of people have actually sold out of this on the previous dive here, where you see there. I refuse to sell it and hold it. A lot of people sold it when it went back up and they got some profit. I'm going to hold it. I really do think it'll go back up to this sort of level. I really do. So we'll see what happens with that. But at the minute I'm 32% up. I'm happy with that, and it has a nice dividend yield. It's not 9.8%. It's gone up so fast it hasn't adjusted yet. I think it's closer to 4% dividend at the year. Although I did buy in around the 10% mark, quite low. So for my money, I get about 10% for my buying money, but it's about 4% now. Then we go on to the ETFs. We've got the FTSE 100. Let's take a look at this. The last 3 months is up 4%. It's not bad. It's just steadily going back up. It's slowly recovering. 9% up. Nothing more you can say about that, really. And finally, the FTSE All-World High Dividend for the last 3 months. I'm up 7.5%, which is really nice. You can see it's a nicely growing stock. And it's not a bad dividend with this one as well. It's 11% up. So that's it. GlaxoSmithKline, I had to stop buying because it got such a big position in my portfolio. I couldn't justify keep buying any more of it. But 16 positions, there's the split down for you. I do want to start increasing these positions. Maybe add 1 or 2 more like PepsiCo, like I say. But there's the split for you. I'm not very comfortable with GlaxoSmithKline being 10% of my portfolio. So I really do need to level the others up. On the bottom there you can see Apple and Microsoft. Again, I'm struggling whether to keep that or not. And legal in general down there is quite low because I really don't want to increase that anymore, being 50% up. But I just don't know what to do with that one as well. So, yeah, that was the portfolio for the dividends. Now we're going to jump over to see the dividend breakdown in the dividend app. So this is dividend flows, the dividend app that I use. Okay, and if we go into the totals, you'll see I'm 7% of the way to my goal. My assets are about £4,000, which is correct to my investment portfolio, which gives me a monthly dividend of £14. My yearly dividend is 170, which is great, and a 4.24% average yield return. I'm looking to get that to £500 a year. That's my next big target. So I'm well on my way to getting to the £500. If we actually look at the actual breakdowns, you can see for March it should be about £11. April is another big month where it's £20. And then it slowly goes down. We've got a few big months coming up. So if we look into the portfolios, you can see March. Again, I haven't got Raytheon Technologies yet. I have not got Royal Dutch Shell, and I think it was Johnson & Johnson or 3M that I haven't got yet. So although these aren't included on the figures yet, they will come in April's bracket. And again, next month I've got a few big payers. I've got the GlaxoSmithKline at £6. I don't know why it keeps saying the FTSE 100 is £6. I never get that much in my account. I think it's one of those that has not been updated. But yeah, that's the monthly breakdown of my dividends so far. So we jump into my ISA account, and this is my growth portfolio. As you can see, the last 3 months, it's pretty flat, really. I'm surprised I'm in the positive because it's been such a terrible 3 months, hasn't it? Most people are in the red or have lost quite a lot. So I'm quite lucky that I'm just gripping on in there, the £7 mark. We can look at the pie chart. The Fang Plus Plus is my monthly paying, just added to. I do add a few bits in there with the popular growth stocks, £50 a month. That's been going in there still every month. I'm slightly down in this one. Obviously Microsoft is okay, but Tesla's down 15%, Amazon's down 5%, Apple is down 6%. So not great really. All these growth stocks were the ones that got hit, unfortunately. Nvidia is down 5%, Alibaba is down 11.5%. That's not very good. And Square's down 9%. So a lot of those technology growth stocks that was hit, I have unfortunately been hit as well. If we look at the auto, currently tracking just under my goal of 50,000 in 4 years for this. Anyway, we go back to the main investment screen. These are the parts that I invest the big chunks in. So Alibaba, you can see, has had a really bad last month. It has dropped quite a lot from $308 right down to $227. And as I own a full share in this, I have took a really big whack of this, unfortunately, on my portfolio. But it's one of those that I think is going to recover. It's going to do really well. It's like the Asian Amazon, really, isn't it? It's one of those companies. So my next big position, Draftkings, we've got 3 shares in it. But as you can see, it's been a nice upward trend. Even through the big dip, it's had a nice upward trend. Last 3 months, it's up 22%. I actually bought in this quite high, so I didn't see much of those gains. This is a new position. This is my newest position. I am up 3.65%, and this is the only stock that I'm in a green on my FX effects. So I don't know why that is, but it's nice to see. But yeah, that's going to do really well. I'm going to keep adding to it. Draftkings, as it opens up in the US, it's going to do really well, I think. Okay, my next position is S4 Capital. This is UK based, and again, it took a massive dive with everything else, but it has recovered quite well of late. So I am back in the green on this one. I did buy a bit more in on this one when it dipped, so I got my average down a bit more. And again, I'm up quite a bit, well, 5% really at the minute. Tattooed Chef is my other big position, and this has took a massive beating. It's actually down 23% in the last 3 months, which is a really, really big kick in the teeth. But again, these prices, I never thought I'd see these prices again, $19 a Tattooed Chef. So I'm going to load up as much as I can on this. I think that's a great price. Again, I think this can do $60 in a couple of years' time. So again, a good chance to triple your money on this one, I think. I'm going to load up as much as I can while it's this price on Tattooed Chef. And that's the portfolio for you guys. So I am 0.85% up. Let's jump on now and let's have a look at the paper return on investment, which is always different to this. Okay guys, thanks for joining the paper trail. Let's have a quick look. So as you can see, for the month of March, I've not spent anything on stocks. I've never done that before since I started investing, but unfortunately with the big move and being screwed over on furlough, I just haven't got any money this month to put in, unfortunately. So this month is a blank, but I have actually put in £750 so far this year. So I had a really good January and a good February as well. So I put £750 into the invest account with the dividends. And I bought Old Republic International. I bought one of those, and I actually increased my average in that. FTSE World Dividend, I bought 2 of. Coca-Cola, I bought 2 shares of. FTSE 100, I bought another share of. Realty Income, I bought 2 more shares of. And AT&T, I've bought 4 more shares of. Raytheon Technologies, I've bought 1 more share of. 3M was a big purchase for me in January. I bought 1 more share of those. I bought 1 more AbbVie at £75. And GlaxoSmithKline is probably my biggest purchase, £137.99. And like I told you in the video, I bought 11 more shares of that. I had to average that one down. It was just doing so well. So I have spent £750. It's just unfortunate I've not been able to do anything in March. Well, let's take a look at the dividends now. So there's my special dividend that I got from Old Republic. £8.67 for the shares, $1 each it was. And I normally get that every year. 4 of the last 5 have had that. So I got £14.11 in January. I got £6.75 in February. And I've got £7.43 in March. Now I have got Royal Dutch Shell, Coca-Cola, and Raytheon Technologies to come on this one. So that's going to probably pop over into the April column now. So April should be a big bumper month. But yeah, my total dividend so far this year is £28.29. If we look into the main sheet, then this is my main dividend spread for you. I've got nothing in for March. There's my $7.50 I've put in for January and February. I haven't had any more free shares this year. I think that's because they've cancelled it, and I don't get many anyway. My dividends are all on the bottom for you there. So far this year, I've put in I've made £778, and that is brought out this year a return on income of 27%. Now that is so high because last year in December I had a bit of a knockback. We all got a bit of a knockback in December, and it knocked my return on income down to 13%. I think that was a lot higher last year, but that last month in December really knocked that down. So this 27% is just a rebound of that this year, really. But 27% so far this year, I can't really grumble at that for a dividend stock portfolio. And that brings me to 16.17% return on investment since I started last September time. And it has given me a £556 return. So not bad really, 16% return income, 27% this year. You can see the dividends are nicely tracking, a lot higher than last year. Obviously that's because I didn't have any dividends last year. But that's going to continue to grow this year, I'm sure, as well. I have started tracking my investment portfolio for my ISA, my growth. I've just put it all into one box for this month because that's the start of it. I've invested £800 into my ISA so far. It's got a few dividends, not a lot really. And so far my account is up to £861. So my growth portfolio has a 7.7% return on investment since I started that a few months ago. Now, that is not bad really. To say that we've been hit so hard in that portfolio, all my tech stocks are in there, and they've been absolutely battered this last few months. So to say I'm still 7.5% up, I'm quite happy with that. Obviously, I want that to be a lot higher in the future, but because of the rough time we've been having, and we have really lost a lot, that should be a lot higher than it really is. So yeah, I'm happy with that for now. I want it to grow more. But there we are. That's what the figure is for the growth portfolio, 7.68%. I'm going to jump out of the phone now, guys, and I'll speak to you in person. So there you go, guys. What do you think? That's not a bad return on investment, is it? 27%, is it? Something like that for the year so far. That's because it dipped a bit in December, and I lost a lot of my gains in December. But what dips in December comes up again in January. So yeah, that's where I am. I'm really happy with the dividend portfolio. Dividends are coming in thick and fast now. You might have noticed on there that there are 3 dividends this month that have not come in yet. They will come in on the next month's video, so that'll bump that one up. Shame about the growth portfolio. At least I'm in the green. At least I'm up on return on investment, so that's not too bad. To say the market has been crashing so much the last month, to say that I'm in the green still, I'm really happy with that. And as the market recovers, that will be a great performance in that portfolio, I'm sure. Unfortunately, because the house move and the furlough, I've not been able to put any money in March, as you saw on the video. I really am upset about that, but I just don't have the money at the minute. So that is why none has gone in March. I'm kicking myself that I can't get any more in this dip because it's a great time to buy, isn't it? And I missed out in the crash as well last year. I didn't start investing till after the crash. So yeah, at the minute I've missed out the crash, I've missed out this dip, but hey ho, life goes on. The portfolios are in a really good position. Just to let you guys know as well, if you want to see when I'm buying and selling stocks, you've got to head over to my TikTok. It's _ Richard J Mitchell, same logo as this channel. Go and check it out. I literally post on my TikTok 3 minutes or so after I buy or sell, so you get it straight away. There's no charging £5–10 for Patreon to get access to that. My channel's not big enough, so it's all free on TikTok. I'd love it if you could go over there and give me a follow if you're on TikTok. That's it for today, guys. Don't forget you can subscribe to my Trading 212 free link share underneath. Bear in mind that they've stopped taking new applicants at the minute, but obviously this video is on YouTube, so they'll probably start that up again after a while. And you'll deposit £1 and you can get a free share worth up to 100. Just a little shout out there. It'd be awesome if you could do that if you want to. Anyway, for now, that's it, guys. I'll see you on the next video. I'm sorry it's been so long. Back to monthly videos next month. Back to investing in dividends next month. And I'll catch you on the next video.